Kundan, good morning. Okay, I'm waiting for 1-2 minutes. Then we'll start immediately. Okay, we have to do an important concept today, replacement. Let everyone come in. Then we'll start immediately. Okay. Good morning. Good morning. Okay. Just let me know whether my voice is audible properly. Screen is visible. Then we'll start. Okay. Okay. Chalo. We'll start. Pay attention, please. A very good morning to everyone. Today is day number 3 of our CMA final SFM revision batch. Okay. Today we're going to do a very important concept. Before I move on to that, let me just tell you what we have done after now. Okay. So it's been 2 days. We're doing capital budgeting. We started with that chapter. First, we're doing the warm up. It's basically all the basics. Okay. So in the first lecture, we did payback period, discounted payback, net present value, profitability index, internal rate of return. Okay. Then we moved on to something called as CFAT. Okay, in the last lecture we computed CFAT and the NPV table. Okay, we also did IRR, internal rate of return. Okay, today's lecture is a bit important. Today is a very important concept, a replacement, which is being asked in the examinations. Okay, now before I start with this concept, let me give you a brief highlight of what exactly is the replacement concept, and then we solve a couple of sums. Okay, so first things first. Whenever a replacement question is asked in capital budgeting, the first thing you need to understand is one thing: why are we doing this and how are you supposed to identify it's a replacement question. Okay, first, replacement question will not always tell you in the question that please solve by replacement method. Okay, replacement means there is an existing machine in your factory. There's an existing machine in your factory and you want to replace this machine with a new one. This is as simple as that. Okay, but you are considering all the effects of the old versus new. So if you're thinking, sir, if existing machine is already there, this means that when we are going to buy the new machine, point number one, we are not going to keep both the machines. It doesn't make any sense. So either we keep the old one or the new one. But before, when I'm going and buying the new machine, I need to make some analysis, because if at all the new machine is causing me loss, I won't go ahead with the new machine. So we have to show them in a very proper format that yes, which machine is viable or which machine we should go for. Simple. This is the concept. Now, when you're doing this, there's a method called as incremental method. There is a method called as incremental method in your replacement concept itself. Okay. So what is the meaning of incremental method? It means that you need to compute everything. See, there are 4 things which are very important for NPV. One, your outflow, your inflow, your discounting factor, and your last will be your NPV and your scrap also to some extent. all of these factors will be computed on incremental basis. So what is incremental? It is new minus old. New minus old. It is only the middle figure. That is the incremental value. Simple. Sir, if you are going ahead with this replacement concept, this means that this existing machine is already there in my premises. Yes, it is there. So have we bought the new machine? No, we have not bought it. We are thinking to whether to buy it or not. That is why this concept is there. Sir, so in the existing machine, what all will be there? See, in the existing, if you're thinking of buying a new machine, this means that the existing machine has been used for a couple of years now. It is not like that you have bought the existing machine like 1 year back and replacing it. No, you have used it for a couple of years. And now the problem is the maintenance cost of the existing machine is rising to some extent. Point number one. And because it is rising to some extent, the owner is thinking, oh my god, now we should go and buy the new machine. So one point which you need to consider is what the rising cost of the old machine. It has to be operating cost or maintenance cost. Okay. Now point number two is this: if you think of buying a new machine, one thing is for very sure, you will buy back the old machine. You will not keep two machines in a factory. So for example, if the new machine outflow is 20 rupees, the new machine outflow, if you're giving 20 bucks to the new machine and the old machine is going to fetch you scrap value, remember one thing, there are lots of tricks over here. The examiner might confuse you in a lot of ways. Everybody knows scrap value is at the end of your useful life. But what is happening over here? The day you're buying the new machine, the examiner might give you two scrap values of the existing machine. I repeat myself again. The existing machine might have two scrap values. One, which will be at the present day. Present day as in the day when you're going and buying the new machine. The day which we are comparing all of this. So if that scrap value is given you, then it makes sense. If I'm buying the new machine, I'll reduce the scrap value of the old machine. Example, if it is 5. So your net outflow will be 15 rupees. But if scrap is not given at that point of time, it is also called as realizable value. If it is not given, forget it. And they will also give you scrap value at the end of useful life. So whenever the useful life is there, that scrap is different. Okay, this is one thing. Second thing in these kind of sums is the main part is your depreciation. The main part is your depreciation. Now, if you have done income tax, in income tax there is a head called as Hgpa, and in that we follow block of asset method, block of asset concept. So one block has 1%, and the whole block will carry the same percentage. Opening WDV plus purchase minus closing. Okay. Now the point is, in this method we follow block of asset concept. Your workload, please pay attention. Your workload on replacement method will be less if these two machines are belonging to same block of asset. If they belong to same block of asset, then your calculations will reduce to some extent. Sir, why? How is this? Because see, what did I tell you in the starting? We need to solve by what method? And that is incremental method. Whatever it is, might be your outflow, inflow, any scrap value, anything. It is new minus old, new minus old. Sir, this will also apply for depreciation. Yes. So depreciation of the new machine minus depreciation of the old machine. So you might think, sir, this means we need to compute two different charts. Like one chart for the new machine, depreciation, and the other chart for the old machine, and then reduce the value. Yes, you have to do this only. But if it is block of asset concept, if the whole two machines are belonging to same block of asset, then there is no need to do this. I tell you why in a couple of minutes. That's the first sum which I have taken. Okay. So can we start with the sum? Okay. All these concepts will be like done in this sum. Okay. I've taken two different sums. Okay. This is one, and there's one more sum which is there in the next page only. Okay. But we'll do everything and then we'll go ahead. Okay. Please, everybody, you have to pay attention. Okay. These sums are important. Understand the concept. You can solve any sum. Okay. Chalo. Now, everybody out there active. Okay. Vagator Limited is considering to replace one of its machines. I hope you're able to see it on the screen. I'll just zoom in for a bit. Vagator Limited is considering to replace one of its machines. Your first striking word is here only. The moment it is replaced, you need to understand it's a replacement. You need to think that way, okay? So they have given you information for two machines, the existing one and the new one. Everybody, please pay attention. The existing machine was bought 3 years ago for rupees 10 lakhs. The existing machine was bought 3 years ago for rupees 10 lakhs. What does this mean? This means that they're standing at the end of third year. 3 years are already gone now. We're standing at the end of third year, and the existing machine was bought for how much? 10 lakh rupees. Okay. It was depreciated by 25% per annum on WDV basis. Can you please do one thing for me? You might have got it. If you purchased the machine 3 years ago for rupees how much? 10 lakhs, and today you're standing on the third year and you have depreciated the machine for 25% on WDV basis, can you please tell me what is the WDV standing as of now in your books of account? 10 lakh minus 25% minus 25% minus 25%. 4,21,875 is the WDV of that existing machine as of today. Let me know, have you got this? Have you got this figure? 4,21,875. Let me know this, then only I'll go ahead. Let me know whether you have got this. 4,21,875. Sangeeta, no, this is my question. It is not available there, but might come for your exams. Have you got 4,21,875? Anybody? 4,21,875. I just depreciated 10 lakhs for straight 3 years at 25% WDV. Anybody who's got this? Okay. Now, it has a remaining life of 5 years. Oh my god, one sec. So what are they trying to tell you? Go very easy, huh? Go very easy. This means that the existing machine has a total useful life of 8 years, 3 years which have already gone, and 5 years down the line. So total useful life is 8 years. But its maintenance cost is expected to increase by rupees 50,000 per annum from the 6th year of its installation. From the 6th year of its installation. See, even if you're not able to see the question, I don't know where you are watching, mobile or laptop. Even if you're not able to see, I'm dictating every word. Okay, whatever I'm just dictating, just write it down. He's telling this, he's telling that. Okay, it might be very easy for you. Okay, chalo. Because this is the last lecture on YouTube Live. From Monday, it is not going to be YouTube Live. Okay, it's going to be what Google Meet only. Okay, so from Monday, I'll provide you all the soft copy notes and all. Okay, you can get it printed also. But as of now, you need to just watch it over. I'm dictating every word. Okay, and I'm dictating very slowly. Chalo. Up till now, what we have done? Existing machine was bought 3 years ago for 10 lakhs. Depreciate 25% per annum WDV basis. Its present value, its present book value is how much? 4,21,875. We did simply 25% minus for 3 years. Done. Okay. Now, next, its useful life, more remaining is 5 years. So total useful life is 8 years. You can write down these small things. Its maintenance cost is expected to increase by rupees 50,000 per annum from the 6th year of its installation. Important, very important. What are you telling? The existing machine, the cost is going to increase 50,000, 50. But from where? From there. From the 6th year of its installation. Boys and girls, we are standing at the end of third year. So 4, 5 and 6. I'll draw the timeline. Okay. 6th year, from that onwards, 50,000 per annum is going to increase if you continue your existing machine. Done. Now, the new machine is costing rupees 15 lakhs and is subject to same rate of depreciation. Now, this is the most important line in your whole question. If you're not understanding the worth of this, then the whole question is of no use. If you understand that line, the meaning of that line is what? That they're telling you it belongs to same block of asset. So this means our calculation part is reduced to some extent. The answer is yes, it is positive. I'll come to that part, but remember it belongs to the same rate of depreciation. So what is same rate of depreciation? It's written over here. 25% on WDV basis. Simple. On sale after 5 years, it is expected to net rupees 10 lakhs. What are they trying to tell you? Now remember, see, from this paragraph, the information about the new machine is getting started. Okay. The first paragraph was all about the existing machine. The new machine is going to cost you 15 lakhs. Okay, done. And on sale after 5 years, this means what? The useful life of the new machine is 5 years. So even the old machine useful life, the remaining life was 5 years, even this. So we have to make a table of 5 years. Yes, that is exactly correct. Now, this is 9 lakhs is the scrap value of the new machine. So after 5 years, you get 9 lakh rupees. Okay. With the new machine, operating costs are expected to decrease by rupees 1 lakh per annum. See what I'm trying to tell you. If you get the new machine, your costs are going to go down because of new technology. It's very brand new. So maintenance cost, everything going to be very less. So they're telling you the costs are expected to decrease by rupees 1 lakh per annum. Okay, now, sir. In addition, the speed of the new machine would increase the productivity, would increase. They're talking about the incremental figures. See, whenever replacement is there, we need to compute by incremental method only. So they already given you, because of this, the increase would be how much? 1.5 lakh. That is 1,50,000 per annum. That is the increase. Okay. They have given you tax rate, they have given you discounting factor, and they have asked you a very beautiful question: is this proposal viable? Is this proposal viable? So whether you will go ahead with the replacement or not, whether you will go ahead with the replacement or not. Have you understood this now? Now this we have to solve. Okay, solve it very aram se. But before I solve this, pay attention. So this is the scenario: 1, 2, 3, 4, 5, 6, 7 and 8. The information given for the old machine, so this is over here till year 4, 5, 6, 7, 8. Why have I written that? Because the old machine had 8 years of useful life. Pay attention now. But it has a remaining useful life of 5 years only. So this means that this will be my first year, second year, third year, fourth year, and fifth year. Okay, have you got this? Have you got this? 1, 2, 3, 4, 5. My new machine comes into picture where? At the end of third year. So from that onwards, my first year is going to start, and that old machine is already gone. Even that machine has useful life of how much? 5 years only. So I need to do a table for how much? 5 years. This is what exactly it is. And why have I draw this table, this timeline? Because of one thing, and this is because of this 50,000 per annum. Okay, we'll do that. Can we start doing it? Can we start? Everybody ready? Everybody ready? Everybody ready? Step number 1. Presentation is of utmost importance. Okay, so computation of everything will be preceded by one word called as incremental. Okay, so that is very important. Computation of not outflow. What I'll write? Computation of incremental outflow. Computation of incremental outflow. Computation of incremental outflow. Computation of incremental outflow. Very simple. Very simple. Particulars and rupees. Particulars and rupees. Okay, so that is so simple. They have already given here 15 lakh rupees of the new machine, so that is my outflow. No boss. Are even if you are thinking of buying the new machine, will you keep both the machines in your factory? The answer is absolutely no. So this means what you need to understand the scrap value of the existing machine as of today. So what I'll do is cost of new machine. I hope you're getting this. 15 lakhs. Okay, less what I'll write, scrap value of old machine. Scrap value of old machine. So how much is it? So see they are written over here. Its present realizable value is 6 lakhs. So this 6 lakhs is what scrap value? End of third year or at end of 8th year? No boss. They have written no present realizable value right now at the end of third year. So where's the timeline? This value is how, this scrap value is how much? 6 lakh rupees. This is the scrap value of the old machine. So yes, actually I want that only, no. So what I'll reduce this from here is 6 lakh rupees. I hope you understand this. How much will be your value? That is your net outflow. This is your net outflow. 9 lakh rupees. I hope you have got 9 lakh rupees. Keep it very simple. Huh? I mean, understand everything, what is happening. Even if you understand one sum, no, you can solve any sum. But if this goes bouncer, gone. Okay. Now, step 1 is done, very simple. Now comes step number 2. And what is step number 2? Very important. Computation of incremental depreciation. Computation of incremental depreciation. Incremental depreciation. Sir, one sec, one sec. Now for depreciation, you said that we have to compute the depreciation of the new machine minus depreciation of the older machine and then pick up the figures. No, what did I tell in that? That if this belongs to same block of asset, your work is reduced. Okay, so first do one thing, write those lines in the book. Okay, please write down. It's a small note. Okay, as both the machines, as both the machines, as both the machines belong to, as both the machines belong to same depreciation, same depreciation rate, hence they belong to same block of asset, same block of asset, same block of asset. Okay, next write down block of asset, block of asset concept, block of asset concept should be used, should be used for computing, for computing incremental depreciation, incremental depreciation. I hope this is getting in your head. अरे हाँ, who is this? Jyoti, patience, patience, patience. Step by step we are going. Maintenance cost, all these operating costs will not come over here. Now we are focusing on what? Depreciation. When we'll do CFAT, cash flow after tax, that's where you need to ask that question. So what about that now? Not now, not now. Let's focus on this. First we need to complete the most important part, that is depreciation. Okay, that's what we are doing. Now, please write. I give you a shortcut trick also for this. It's very simple. Incremental WDV of the block, but to understand everything. Incremental WDV of the block, how much is it? WDV of block after replacement, after replacement, after replacement minus WDV of block, WDV of block before replacement, before replacement. Are you getting this? There's a long cut, there's a shortcut also. Okay, I'll show you both. I'll show you both. Okay, so first you need to compute what? First you need to compute the entire WDV of the block, incremental, and on that figure, you'll compute depreciation. Okay, this is the long cut. This is the long cut. Okay, write that, and I'll show you a shortcut after that. Okay, so how you are supposed to do this? How you are supposed to calculate the incremental WDV? It is very simple. Chalo, particulars and rupees. Particulars and rupees. This is a long cut. Huh? Depreciation on what is this? What is this? 10 lakh 70 to 125. Kundan, what exactly is this? Depreciation on 10 lakh 70. No, 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 no. That figure is wrong. That figure is wrong. Wait here. Why you are running? आराम से करो ना. कुछ गाइए क्या तुमको? Why do you have over? Opening. How much is opening WDV? Ladies and gentlemen, how much is the opening WDV? I told you pehle only. How much is it? 10 lakh depreciated at 25% for 3 years. How much was it? 4 lakh 21,875. Have we computed now? First. Next. Add. How much is the, tell me? How much is the Addition in your block. Please concept the block concept should be there. How much is the addition in that block? How much have you purchased? What is the cost of new machine? 15 lakhs. 15 lakhs. 15 lakhs. And how much is the sale? How much is the sale value of a set? That is this. So sale is 6 lakh. The old machine is going now from a block now. So what I'll write over here? I'll write here 6 lakhs. Cool. Can you please give me an addition of how much is this? Fast. Where's my calculation? $13,21,875. 13,21,875. Okay. Chalo. Now this is the WDV of the block. This is the WDV of the block after replacement. One second. This is not the final figure. This is not the final figure. Now you have to do one more thing. You have to less what? The WDV, because see, we have to do replace incremental, no? WDV of block before replacement. How much was the WDV? Please tell me, because it is obviously new minus old. It was 4 lakh, the above figure 875, and now you will get 4 lakh 875. You will get 9 lakh. This is your final answer. For one second, what on earth is this? What exactly is this 9 lakh? What exactly is this 9 lakh? 9 lakh is the incremental. It is the incremental. This is the incremental WDV of the block. Sir, this means we are going to compute depreciation on this figure. The answer is yes. The answer is yes. And it is going to be very simple, like we did yesterday. 3 columns only. You're opening WDV, depreciation and closing WDV. Pick up the depreciation column in your CFAT. But sir, acha, this is the long cut, okay? Now what is shortcut? Shortcut. Tell me one thing. Where is this 9 lakh figure? Where is this 9 lakh figure in your answer now? See here. This means what? If. Ladies and gentlemen, please pay attention. This might save a lot of time in your examination. If replacement question is asked, and if both the machines belong to the same block of asset, this is what you need to do. You can compute the depreciation directly on this only, 9 lakh. And that is the exact value which is remaining in your block, no? The new is coming, the old is going out. Finish. That is exactly the figure which will come. So instead of doing all of this stuff, you can write what? The shortcut method. Please write down. Or public, you're getting the what am I trying to say over here? Tell me that first, huh? Or incremental WDV of the block. Incremental WDV of the block. Cool. So what? Simple. That same thing. Don't write in the exam, same as step number 1. One tight he'll give you. Don't write. Very many people have that habit. No, same as above. No, not same as above. You should write everything. Purchase price of new asset. Purchase price of new asset minus sale value. Sale value of old asset. Figures, please. Chalo, fast. Rupees 15 lakh. Rupees 15 lakh minus rupees 6 lakhs. Next, rupees 9 lakhs. Rupees 9 lakhs. Got it? Simple. This we can do this only directly. Okay. No need to do any other stuff. Now, what is the step number? This was step number 2. No. Now step number 3. The answer might look very big, but it's very simple if you go in the flow, okay, and if you understand everything. Step number 3. So what will be step number 3? Computation of depreciation, incremental. So that's the incremental value. Computation of incremental, yeah, computation of incremental depreciation, computation of incremental depreciation. Cool. Okay. Now simple. Here opening WDV, depreciation, and closing WDV. You do it fast. You do it fast. Chalo. Okay. Year one. Year one. How much was it? 9 lakh. Depreciation at the rate of how much? 25%. I'll write it over here. People who are joining in new, please watch from the starting. Please watch from the starting. Okay. 9 lakh. 2 lakh 25,000. 6 lakh 75,000. You do it yourself, huh? Oh, what? You will just copy paste. 6 lakh 75,000 into 25% will give you 1 lakh 68,750. 5 lakh 6,250 will be your closing WDV. Now again this will come over here. 5 lakh 6,250. 25% will give you 1 lakh 26,563. This will give you 3 lakh 79,687. 687. Next. Fourth year, 3,79,687. Next, this will give you how much? This will give you how much? 94,922. The closing will be 2,84,765. I believe 1,379. 687 minus 94,922. Yes, this is 5. And last, 4,765. 4,765. Fifth, 2,84,765. 25%, 7,119, 71,191, and you will end up with 2,13,574. Is this your closing WDV? Yes or no? Give me an answer fast. Give me an answer fast. Everybody, you need to be active in the comment section, boss. Okay. Chalo. Is this the answer? And who asked that question? Jyoti. Jyoti, now you pay attention, huh? So now CFAT is going to start. Can I go ahead, please? If you've done with this, simple calculation, you can do it. Okay. Step number 4. Step number 4. Now, step 4 is the most important step in this entire sum. If you're able to crack this sum, this step, the sum is gone. The sum is like very easy. There's nothing left in it. And this will be what? Computation of incremental what? CFAT. Incremental CFAT. Computation of incremental CFAT. Cash flow after tax. Now, fun is there. Fun. The point is how you're supposed to do it. Okay. Anybody can do it. You can start solving also. So what we'll do is, first, for how many years we have to make? So 8 years or 5 years? 5 years. I told Pele only. So see, where's this? This was the timeline. This was the timeline. 3 years are already gone. 3 years are already gone. You have left with 5 years. The new asset also has 5 years, and the old asset also has 5 years. So table will for how many years? Put together. 5 years. For how many years? 5 years. 5 years. Come on. Particulars. And next 1, 2, 3, 4, and 5. As simple as that. Okay. Start presentation is very important. Let time go, but presentation have to do properly. Huh? Can I start? Ladies and gentlemen, can I start? So what you will start? One sec. First shows the question. Only you have the question. We don't have. Okay, now. Please tell me one thing. Please tell me one thing. CFAT is always started by earnings. It might be earnings before depreciation and tax. It might be earnings after depreciation but before tax. It might be anything. But in this question, I have already told you we need everything incremental. So this means in some question which I take on Monday, don't forget that. So in that question, no, what it's a beautiful question, very big. They've asked the examination. The point is there are two revenues coming from the both the machine. Then you need to what? Deduct this, reduce both the figures, and then you get a figure of incremental. And but in this question, they've already given you the increase over the old one, and that is how much? 1,50,000. That is your starting point. That is your starting point. Where's the answer? Here. That is your starting point. So start, please start. Increase in revenue. I want everybody to pay attention, boss. Please pay attention. I remember this guy. Who is this Balu? You were there in the marathon or what? By any chance? 1,50,000. 1,50,000. 1,50,000. 1,50,000. And 1,50,000. And 1,50,000. Chalo. So what to do after this? So okay, we have done now. We have done this. Now what to do after this? You can please tell me, anyone? Anyone? Now where is that girl? Where is that girl? Jyoti, now pay attention. Everybody pay attention, not only Jyoti, everybody. If you understand this step, which I'm going to tell you right now, the question is done. Question is complete. If you understand this, okay? To understand, you need to pay proper attention, okay? Now, in a CFAT table structure is very simple, boss. Revenue, earnings, minus cost, minus depreciation. And tax and add back depreciation, forget that. But the two things are very important. The earning part, which you have already written, and now you have to complete what? The expense part. Now, in this, there are a lot of expenses. I'll read one by one. I want everybody to pay attention. I'll be marking that. Just pay attention over there. Its maintenance cost is expected to increase by 50,000 from the 6th year of its installation. So there is one cost over there. Okay, one sec. Sir, even for the new machine, the operating costs are expected to decrease by 1 lakh. So they have written increase over here, and they have written decrease over here. What to do? Understand the logic now. Okay, everybody. See, remember one thing. I am thinking whether to buy this new machine or not. I am thinking whether to buy this new machine or not. Okay. Point is, the old machine, if I would have used, see my wordings, if I would have used the old machine, I would have to incur rupees 50,000 from the 6th year of its installation. But am I planning to use it? I am planning to buy the new machine. So this means that my cost is saved. My cost is saved, right? I'm not using the old machine now. If I would have used, then I would have to incur rupees how much? How much? 50,000 from the 6th year. Sir, where's the timeline? Timeline. Oh boss, please see here. This they are talking, this. So they are telling, from the 6th year, if you use the existing machine, you are dead. You need to incur 50,000 per annum. The old machine is becoming very old now. You have to incur more money. But I'm thinking to buy the new. So can I say one thing? My cost is saved. If my cost is saved, that is my inflow. Are you getting that point? This 50,000 per annum from 6th year is going to be my inflow only. Because I'm not going to incur only that. ये भेजे में गया है क्या? Is this gone in your brain? One point. Second point, so no. Second point. Now coming to new machine, that is simple, simple. If you buy the new machine, your operating costs are expected to decrease by 1 lakh. So boss, that is my inflow only, that is my savings only. If I'm saving 1 lakh rupees per annum because of the new machine, that is my what? That is my what? That is my savings. So can I say one thing? Even 50,000 is my savings, even this 1 lakh is my savings only. Oh, कुछ समझ में आया क्या? Are you understanding what I'm trying to tell you? Sir, one sec. So this means we are going to add over here. Add. What? Are Baba, decrease in cost. Decrease in cost. Decrease in cost. Everybody, did you understand everything what is going on? So tell me one thing. In the first year, what figure I'll put? What figure I'll put? I'll write only 1 lakh rupees. No, one was 1 lakh only. No? This is 1 lakh. Sir, what about 50,000? Wait, Baba, wait. That is from 6th year onwards. 6th year, not now. Not now. 6th year. Pay attention. This is my technically 4th year. This is my 5th year, and from 6th year, that means the 3rd year, right? From here, I'm going to get more savings. That 50,000 will also be saved now. So I'll write 1 lakh 50 over here, 1 lakh 50 over here, and 1 lakh 50 over here. If this is gone in your brain, sum is dead, sum is gone. There's nothing left only in the sum. Chalo, is this? Did you get this? First, tell me that. Did you get this? First, tell me that. Then only I'll go ahead fast and do it fastly, please. So much time you take, Ray. Chalo, done or what? Yes, no. Yes, no. Total, fast. Now you'll write here what? Total savings. How much is total savings? Total maro, total. 2 lakh 50,000. 2 lakh 50,000. 3 lakh. 3 lakh. And 3 lakh. Got it? Got it? Now, if this is done, are finish. What is there now? Sir, what depreciation का table निकालना है. What to do about this? This depreciation. Reduce it. Simple. Because you've already done the working note, right? So less depreciation as shown in your working note. Don't write that. I'm telling you, you need to write the figures, okay? How much of depreciation? Please do it fast. 2,25,000. Next you have 1,68,750. Next you have 1,26,563. Next you have 94,922, and lastly you have 71,191. Okay. Now after that there will be before tax, then tax minus the add back depreciation, and tell me the figure fast of CFAT. Don't wait for me to solve. Don't wait for me to solve. Don't wait for me to solve. Okay. Please do it fast. I want the figures on the screen. Immediate. Do you understand what did I tell you? Now this will be savings before tax. Whatever figure is going to come. Then you have to minus tax. Tax is how much? 35%. 35%. And then add back depreciation. And then you will get your what? CFAT. Can you please do it? Can you please do it? Don't wait for me to solve it. Savings before tax. Savings before tax. Next. Solve it fast, huh? Chalo. Next. 2,50,000 minus 2,05,000. This will be 25,000. Next you have 2,50,000 minus 1,68,750. This will be 81,250. Next 3 lakh minus 1,26,563. This will be 1,73,000. 1,73,437. 3 lakh minus 94,922. This will be 2 lakh 5,078, 3 lakh minus 71,191. This will be 2,28,809. Okay. Now less tax at the rate 35%. Chalo, chalo, chalo. Savings after tax. And next, last may you add back what? Depreciation again, and then you will get what you want, and that is your CPAT. That is your CPAT. Chalo, tell me fast what are the CPAT figures? Tell me fast what are the CPAT figures? Anybody who has got it, at least tell me first year ka thing. First year ka tell me first year. 25,000 minus 35% plus 2,25,000 is your answer. 2,41,250. 2,41,250. Let me know whether you're getting this. 2,21,562. Next you have 2,39,297. Next you'll have 2,28,223. And next last one I need to complete 2,28,809 minus 35% and plus depreciation. How much depreciation? 71,191. 2,19,917 approx. 2,19,917 approx. These are your figures. These are your figures. These are your figures. Oh public, are you there? Don't sleep. Tell me whether you have got this. Then I'll go ahead immediately. Tell me whether you have got this. Then I'll go ahead immediately. Fast, 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 fast. Are you done? Everybody done? Yes, no. Everybody done? Yes, no. Yes, no. Chalo, chalo. Okay. Now what we are supposed to do is now last this is there. What we need to only do what? This is step number 5. Step number 5. Step number 5. What is step number 5? Please tell me. That is computation of incremental what? NPV. NPV. So if this figure comes positive, then you will go ahead with the replacement. As simple as that. Are you understanding or what? Here particulars, cash flow, discounting factor. कितना discounting factor है? How much is discounting factor? 10%. And then you will do what? DCF. DCF. Okay, cool. This also I'll show you one trick over. Not trick as in the point to be noted over here. I'll tell you one. Let me just draw this. Oh, public. Can we do it? Kavya is telling, sir, I got it. Yes. Only few people are very active, huh? This Jyoti, then Kundan is active, Sangeeta is active, then are from which part of India you're watching, Ray? Like, can you just tell me from where you're watching? Like, I'll understand from where you're watching them. Anybody who's watching right now, they're watching from Hyderabad, they're watching from any other state. Tell me, please. 0 here. This will be my outflow. This will be my outflow. Your outflow is already there. Huh? So basically, you need to write everything. Incremental outflow. Incremental outflow. How much is it? 9 lakh, no? 1 How much is this? 9 lakh. Jyoti is from Bangalore. Sangeeta is from Chennai. Kundan is from Delhi. Kavya is from Visakhapatnam. Balu is from Coimbatore. And बाकी पब्लिक क्या कर रहे हैं? सो रहे क्या तुम लोग बाकी लोग का? Next, 1, 2, 3, 4, 5. Right? We have 5 years, right? The point is, actually first write this, then I'll tell you. Write this. This is your CFAT. This is your CFAT. Incremental CFAT. ठीक है? चलो, what is it? 2,41,250, 2,21,562. I think some people have got up very late and now they are watching from the starting. Now they are watching from the starting as well. Janvi is from Pune. Next, 2,28,223 and 2,19,917. Okay, I hope your discounting factors, take 9, not 9 digits, 4 digit, 0.8264, 0.7513, 0.6830, and 0.6201. I hope the last one is right. 6201, right? Okay. Acha. Now pay attention. Oh, public, please pay attention. Please, for 2 minutes. This too we have done. Can anybody please tell me what is missing in this NPV statement? Can anybody please tell me what is missing in this NPV statement? There's something missing in the statement. I've taken outflow, I've taken inflow. The missing thing is your scrap value. Now, this is the most important part which I need you to understand very minutely. Now, see this. They have given you that, pay attention, please. See, because if you are doing everything on incremental, your outflow is incremental, your inflow is incremental, your depreciation is incremental. So, boss, if the scrap value has to be incremental, can you please tell me the figure for incremental scrap value? You have two scrap values in your screen. This is one and this is one. I am waiting. I'll wait for 2 minutes. I'll have a sip of water. In the meantime, you tell me what is the incremental scrap value which I'll take in my NPV table. So X209, she's telling, okay, I'll do it. Anybody can tell me the incremental scrap value? Anybody? Anybody can tell me? Anyone? No. Your answer is right. Your answer is right. Sir, obviously I'll take how much? 9 lakh only. But your logic is going wrong. So no. Will you see for 2 minutes? Answer is right. Answer is right. Huh? If. So if I would have made a working note, don't do it. I'm just giving you, like, writing for your preference. Reference. My bad. Incremental scrap. So what is the logic for incremental scrap? New minus old. So new scrap, that is the new machine scrap, and less old machine scrap. Is this right? Sir, we have both the scraps for then minus it. No. How this answer is coming right then? Are Baba, see one catch over here. Comparison has to be made if it is on the same page. These two scrap values given in the question are not on the same page. Please understand that. The scrap value given for the new machine is at the end of its useful life. That is when, where's my timeline? That is when over year. They have given you 9 lakh rupees over year. Are you understanding this? They have not given you scrap value of the old machine at the end of this 8 year. It's nothing. There's nothing in the question. They have given you scrap value of the old machine year. They have given you. How will I minus this 9 minus 6? It is not about considering 6 lakhs pehle. It is not about that. Remember one thing. If they would have given me scrap value of the existing machine, not as of today, as of after 8 years, like after the 5 years, here, let us say 2 lakh rupees example, then I would have deducted this figure. But now I cannot do it because there is no value only over there. Just because scrap is mentioned or just because I've considered it, it does not mean I'll take it. If they would have told me that yes, 1 lakh rupees is a scrap value at the end of useful life, I would have deducted it because it is at the same age. You understand this? So if I even have to do this working note, you can show it to the examiner that you know this stuff. 9 lakh nil, and that is why it is coming what 9 lakh. And this I'll take over here. What? This I'll take over here. Again, fifth year I'll take incremental scrap. Incremental scrap 9 lakhs. Same figure. This will come discounting factor. And now you have to please tell me. Now you have to please tell me what is the NPV. I'm waiting for this answer. What is the NPV? एनपीवी मांगता मुझे एनपीवी फास्ट पॉजिटिव है क्या नेगेटिव है वो भी बताओ it took 1 hour for this. Oh my god, can you believe it? And I'm teaching this in revision batch, but it's okay if you understand one sum also. It is more than enough because you understand logic. No, I had chalk. I my next lecture lined up, that's why I cannot extend the timing. But tell me the NPV first. Please tell me the NPV. Okay, I think we got an answer. We have got an answer. It is 5,32,000. My answer is 5,32,243. It might be because of the decimals and all, but your answer has to come in 5,30,000 only. 5,30,000 only your answer has to come. And if your answer is this, no, Balu, no. They'll write specifically whether you have to take the tax or not. Okay, I'll take that sum on Monday. This sum. Okay, there's one more sum which is there, which I'll take it. Okay, on that when you are selling the asset, there will be what? There will be tax shield also. If yesterday you were there in the lecture, I had told 3 things. One is the scrap value which will come at the end. Second, your recovery of working capital, and third is this what you're telling me. Okay, tax shield on what? Your loss. That will also come, but there is nothing in this question. Okay, so this is your answer. And remember one thing, this is what? Positive. So what is your conclusion? What is your conclusion? As incremental NPV is positive, machine will be replaced. Cool? Done? Are you understanding this? Can I go ahead? Like, I had chalked out one more question. You can take a photocopy of this and you can start solving, and you can give me the answer also, okay, on Monday, please. But I'll discuss the whole sum with you now. Is everybody paying attention? Keep the pens down for 2 minutes, okay? Keep the pen down for 2 minutes. Understand this, okay? This is a second question. This is a second question now. A company is using a crane which was bought 2 years ago for rupees 10 lakhs. Okay, that means we're standing at the end of second year. 2 years are already gone. We bought it for 10 lakhs and has been depreciated at the rate of 20% per annum as per what method? WDV method. As per WDV method. So okay. So this means what? Can you please tell me what is the WDV of this crane as of today? Is it coming 6,40,000? Is it coming 6,40,000? Is it coming 6,40,000? 6,40,000. I took 10 lakhs. I deducted 20% for 2 years. Okay. The company requires such a crane for 3 more years. What is the meaning of this? This means that the crane has a useful life of total 5 years. 2 years are already gone. 3 years are there remaining. Now, an improved version of this crane is available now. This means what? A new crane is also available. The salvage value of existing crane is equal to its book value, which you have already calculated, that is 6,40,000. That is the scrap value as of today. So if I go and sell this in the market, the existing crane, I will get 6,40,000. The improved crane can be sold for rupees 12 lakhs after 3 years. The new crane has a scrap value of 12 lakhs after 3 years. Sir, one sec. Indirectly, the new crane has a also remaining useful life of 3 years. 3 years only. So, I mean, old has 3, the new has 3. So, my table will be how much? 3 years only. Existing crane has nil salvage value after 3 years. This is the point I am talking about. In this question, they have written specifically what? The crane, if you use for 3 more years, will fetch you nothing. It will fetch you some value if you go and sell it right away. That is 6,40,000. Annual savings in operating expenses with the improved crane will be rupees 3 lakhs. What is savings? That we do in CFAT. So it will start from this only. Your CFAT table. Depreciation rate for improved crane is 33.13%. Oh my God, sir, one sec. This sum is bit different. This sum is different. Why this sum is different? Because here it is WDV method. Here it is WDV method. But the block is different. It was 20% over here. Now this is 33.13%. Sir, we cannot use the same logic which we did here for depreciation. Okay. Tax rate is 50%. The cost of new crane is 42,50,000. Should the company replace the old crane? Discounting factor 10%. I don't know whether you will be able to solve this or what, but still, you can give it a shot. But one, what do you call that? One trick I'll tell you. You only solve this question. But I'll show you one thing which might help you. In your solvings. See, pay attention. CFAT, cash flow after tax, can be computed by 2 ways. Pay attention, please. See what am I trying to tell you. What will be your step number 1? Everybody focus. Just visualize everything. Just visualize. Step number 1 will be what? Computation of incremental outflow. The cost of new crane minus the sale value of the old crane. If you understand the figures, 42,50,000 minus 6,40,000. That will be step number 1. Step number 2 will be depreciation. Now they belong to different block of assets. So it's of no use doing on that figure only, which we computed on 9 lakh rupees. No. Now we need to compute depreciation for both the machines, cranes differently, and then take the middle part, that's the difference, and that it will go to your CFAT. But there is one more way of doing. You know what is that? So you can also take tax shield on depreciation. This is one more way of solving. What is tax shield on depreciation? See, in CFAT, we are computing depreciation only for one purpose, and one purpose is tax. If tax is not there, depreciation won't come only in CFAT. Because of tax coming there, we are computing depreciation. Because depreciation non-cash expenditure, why will it come in cash flow? Are you understanding this? So what you can do is pay attention. You only have to do this sum. You compute depreciation for the new machine. You compute depreciation for the old machine as per the rate. Then you deduct the figures. You'll get one figure. For example, the first figure is how much the incremental depreciation. That figure is going to come somewhere about 12 lakh 88,667. This is for year one. So what is this figure? So this figure has come when new machine depreciation minus old machine depreciation. That figure is this. On this, you can take this figure also in your CPAT. But what I'll do, I'm showing a new method. You can compute tax shield year only. What is tax shield? The percentage of tax. That is how much? 50%. This will come 6,44,434. In this way, you can complete for 3 years. Take this tax shield figures in your CPAT. What is tax shield? Is tax shield your outflow or inflow? This is my inflow. So in your CPAT, outflow is going to come, inflow is going to come, which you need to compute, and this is going to come, this tax shield, and scrap will come. Try doing it. We'll solve the sum on Monday. Like we'll check it if you have done it. Okay, if you have done it. Now you can take a photocopy of this. You can just pause the video and take it. Try to do it. Please try to do this sum. Okay. Confirm your admissions. I'll meet you directly on Monday. Have a great day.